Welcome back, everyone, to Stock Market Summary Series. Okay, so we've got a really interesting setup brewing today. Third straight day, the market's pulling back, across the board. But underneath all that, you've got assets like Tesla, even Bitcoin, just coiled incredibly tight. Feels like they're ready for a big move. And with some key economic data coming, plus these currency shifts, well, the next 24 hours could be pretty defining. Look, if you find these daily summaries helpful, do us a favor. Hit that like button and subscribe so you never miss a beat. You can always unsubscribe later. And just so we're all on the same page, none of this is buying or selling advice. It's just trading education and market commentary. Okay, with that said, let's get into it. So July 31st, third day of pullbacks. The S&P 500 SPY, it's a lid 0.38%. Still reacting off that weekly resistance line we mentioned earlier this week.
Yeah, and it wasn't just the S&P. The NASDAQ, QQQ, that pullback too, dropped 0.53%. That's after hitting those all-time highs in futures we noted yesterday.
Right. And the Dow, DIA, it shed, 0.77%, still lagging its record highs from earlier in the week.
Definitely lagging. And the Russell 2000, the small caps IWM, that fell almost a full percent, 0.98%, dipped below its 20-day moving average again.
But, and this is interesting, it's still holding inside that bull flag pattern, the one our mentorship folks have been eyeing for a potential breakout. So some underlying structure there, maybe.
Exactly. That resilience is important. And speaking of interesting structures, let's talk Tesla, TSLA. It sold off today, yeah, but it's still incredibly tight. Just squeezed in that symmetrical triangle.
Right between the 200-day, the 50-day, and the 20-day moving averages. We've been watching this one for weeks.
And it's critical. This isn't just lines on a chart. It's showing extreme compression. Volatility just getting squeezed. Short-term momentum, long-term trend, they're all meeting right there. Setups like this, they often lead to a really decisive move, could set the tone for months. Definitely one to watch closely.
That's a great point. We're also seeing Hasbro, HAS, doing something similar, consolidating nicely in its own bull flag, looks poised. And another one that looks almost exactly like Tesla, XOP, the oil and gas EPF.
Same pattern.
Yeah.
Tracked in that symmetrical triangle. Key moving averages, all converging. It's building energy. You can almost feel it coiling up for a significant move, one way or the other.
Yeah. By the way, guys, if you've got a stock you're watching or a question about the markets, drop it in the comments. We might cover it in an upcoming episode.
Good idea. And sector-wise, it was a mixed bag today, wasn't it? Communication Services XLC actually led with a 0.9% gain.
While healthcare XLV really lagged, dropped nearly 3%, just shows even when the overall market pulls back, there are always these rotations happening underneath.
Always. Okay, let's shift to the economic news. That really took the spotlight today. The core PCE price index. That's the Fed's preferred inflation measure.
Right.
It came in at 0.3% for June, month over month. Matched what analysts expected.
Okay, so no big surprise there.
Well, yes and no. It matched, but it is up from 0.2% last month. So maybe a little hint of rising inflation pressure just creeping up again.
Interesting. Something to keep an eye on for the Fed. What about income and spending?
Personal income jumped 0.3%. That's a nice rebound from last month's drop, and a bit better than expected. Personal spending also rose 0.3%, but that was actually a little less than forecast.
So income up, spending steady, but maybe not quite as strong as hoped.
Exactly. It's sort of a mixed picture. It keeps the market guessing,
And that guessing game is about to intensify because tomorrow we get the big jobs report, non-farm payrolls, and the unemployment rate. That could really shake things up, especially with those tariff worries we talked about yesterday still lingering.
Absolutely. Big day tomorrow.
Okay, let's quickly touch on crypto and metals. Bitcoin dipped about 1%, but still very tightly wound in that bull flag pattern we've tracked since last week, just hovering between, 116K and 120K?
Yeah, right in that key zone. This kind of consolidation, this is where patience and discipline come in. Understanding the levels is crucial.
The old GLD saw a little pop, 0.66%, but still below its 20 and 50-day moving averages. Looks a bit weak short-term still.
It does. Silver SLV, on the other hand, dipped slightly, about 0.5%, but it is holding above its 50-day. So maybe a bit more support there.
And the U.S. dollar index, DXY, popped again today, 0.2%, continuing that uptrend we highlighted yesterday.
And that dollar strength definitely puts pressure elsewhere, right? On equities, on metals, it's all connected.
It really is.
Navigating markets like this, choppy and consolidating, it's not just about spotting a pattern like Tesla's triangle or Bitcoin's flag. It's about having a solid plan, knowing your entry, your targets, and crucially, how you manage risk, using stop losses effectively.
Yeah, absolutely critical.
It really is. That practical knowledge, that strategy, that's what gives you confidence, especially in uncertain times. And, well, that's exactly the kind of hands-on coaching and strategy we teach in the Grok Trade Mentorship program.
So wrapping things up for today, this pullback, it feels like a healthy pause, maybe needed. You still have these really interesting technical setups like TSLA, XOP, Bitcoin, all tightly coiled. They seem poised for potentially big moves once we get past tomorrow's economic data.
Definitely. It makes you think, right? How will a surprise number in the jobs report affect these coiled springs? What could that signal for the market's next direction?
Good question. Hey, have a ticker you want us to break down? Drop in the comments below. We really do love seeing what you're watching. All right, that's it for us today. Hope you have a great rest of your day, and we'll catch you in tomorrow's market summary.